Welcome to Pulse 24. This week, we track the talent, the power, and the money shaping the next phase of AI.
It is great to be here, Nate. The constraints are becoming very real.
Let's start with talent. We are seeing top researchers leave established tech giants. How should leaders interpret this migration?
It signals a shift. According to reports from earlier this week, Yann LeCun is preparing to leave Meta to launch his own startup focused on new AI architectures. This follows the news that Intel's AI chief, Sachin Katti, has joined OpenAI to build out its core compute infrastructure, as reported by Reuters on 11th November.
Is this about escaping big company bureaucracy, or a deeper disagreement on the right way to build AI?
For leaders, this is a clear signal that mission and autonomy are becoming powerful retention tools, even against the vast resources of big tech. It suggests the next big breakthroughs might come from smaller, more focused labs.
Staying with infrastructure, the bottleneck for AI is now less about chips and more about power. How should firms be planning for this?
The problem is spawning its own sub-industry. For example, a startup called Exowatt, backed by Sam Altman, is developing modular solar thermal batteries. Their goal is to provide continuous power for as little as 1 cent per kilowatt hour at scale.
That sounds revolutionary, but what are the execution risks? Is it cost or the operational challenge of new technology?
Enterprise architects should start evaluating these novel, localized power solutions now. Microsoft-backed Vir, which uses superconducting cables, is planning pilot installations in data centers for 2026.
Meanwhile, in the markets, there seems to be a tension between massive investment and growing caution. What is the takeaway for operators?
The numbers are staggering. On November 12th, Anthropic announced a $50 billion investment in US data centers. Yet, we see clear investor anxiety. Oracle's stock has dropped on concerns over its AI-related debt, and famed investor Michael Burry just closed his fund, Scion Capital, citing inflated AI valuations.
Is this the start of a bubble bursting, or a healthy dose of financial discipline entering the market?
It means the narrative is shifting from pure growth to capital efficiency. Leaders must now demonstrate a credible path to profitability, not just technical progress.
Time for the lightning round. 2 quick stories to watch. Anya, what's first?
Foxconn, a key supplier for NVIDIA's AI servers, reported a 17% jump in quarterly profits on November 12th, beating all expectations. It shows the demand for the underlying hardware is still incredibly strong.
And a key development in governance?
A German court ruled this week that OpenAI infringed copyright by training models on musicians' work without permission. This sets a legal precedent in Europe, reminding builders to audit their training data and budget for licensing.
Dr. Anya Sharma, thank you for the sharp insights.
A pleasure, Nate.
Anya, stay curious, stay informed. See you next time.